Blessing Aina-Samuel. I'm a development finance specialist with over 10 years of experience in financial management, business development, compliance, and operational leadership. My journey into finance is rooted in the belief that financial literacy is key to personal development and business growth. I have an MBA in accounting and a BSc in finance. I'm a chartered accountant certified by the Institute of Chartered Accountants of Nigeria. I'm a certified tax professional accredited by the Chartered Institute of Taxation of Nigeria. I hold an associate member certification from the Chartered Institute of Personnel Management, among others. I've been privileged to work in the development sector across various portfolios where I help to manage institutional finance, but recently I pivoted into managing people-centered financial solutions, and that's what I currently do with Royale Foodmart. Royale Foodmart is a fast-moving consumer goods hub located in the city of Abuja. We provide everyday food and groceries to families and businesses in wholesale quantities. At Royale Foodmart, we market ourselves as your wholesale partner. This is because we've been able to bridge the gap that exists between producers and then the final consumers. We believe at Royale Foodmart that a stable supply chain system is very essential to ensuring that prices remain stable and that these products are available to consumers who will be needing it at every point in time. So generally, Royale Foodmart is a crucial player in the food distribution ecosystem, and we don't just exist to ensure that food is made available. We want businesses to thrive. We want them to have access to the quantities that they require to run their businesses at the best competitive prices without compromising the standard. The Food and Finance series is my family's latest baby. The Food and Finance series was created by the simple universal truth: everybody eats. Food is easily understood and relatable. Finance, on the other hand, is perceived to be complex. We created the Food and Finance series to use food as a tool for financial literacy. Every day in my experience, I see people make financial decisions without tracing it to the concept behind that, and I believe that when people make these decisions in line with the relevant concepts and principles, they achieve better results. In my experience, one of the biggest financial mistakes that entrepreneurs make is confusing growth with profitability. Entrepreneurs do not let their businesses grow in line with defined life cycles. They often want to rush from the growth stage to expansion stage, and in doing that, they lose a lot of profit. It's just like a restaurant that serves 100 customers in a day but loses profit on every dish that is being served. Secondly, businesses are unable to track revenue and expenses. When a business do not keep accurate records, then the business is bound to fail. Number 3, as businesses grow, there's an increased need for compliance. A lot of businesses ignore that aspect, and then once regulatory authority comes for compliance, it becomes an issue, from tax to other statutory deductions. Businesses do not take note of this. They just continue to scale and ignore all regulatory requirements. Let me state first of all that a good financial system is the bedrock for any business to grow. I'll be using a product-based business to explain how entrepreneurs can create a good financial system. I'll be using the acronym SMART Finance. The S stands for stock taking and inventory management. For a product-based business, stock or inventory are actually cash on the shelf. Inventory management is very key. This has to be done at a defined period using different methodologies, because your inventory tells you a lot of story. It tells you your inflows, it tells you what products moves more, it tells you where a business should focus on. The M there represents maintaining accurate records. For a business, especially a product-based business, you must devise how to maintain accurate records. Records of sales, expenses, and other details must be kept accurately. And that brings me to the next point, which is automate with technology. When you automate with technology, you reduce the human errors that could have been in existence as a result of keeping of records. When you automate with technology, you're able to define your end-to-end process from the moment a customer walks into the store till they leave, or when a customer places order to when that order is delivered. The R represents revenue versus profit awareness. For a product-based business or any business in general, you need to be able to determine what your profit is at the end of the day. This can be done daily, weekly, monthly, or per annum. Revenue is actually different from profit. Revenue is the total inflow a business gets, while profit is the residual income available after deductions of all relevant or associated costs the business incurs. Let me also add that a lot of businesses ignore even the minute costs. Your intellect, staff costs, some payments are made in cash and they are just ignored. They all need to be factored in determining our profits. The T represents track your cash flow. In fact, cash flow cannot be ignored in running a business, especially for a product-based business. You need to be able to determine what comes in on a daily basis, what goes out, and what is left for the business. Tracking your cash flow helps to determine your liquidity. A business should not be short of cash at any point, to carry out operational needs. So for a business to be sure that it is liquid, it needs to track its cash flow. The F there represents funds should not be commingled. Please, entrepreneurs, do not commingle your business funds with personal funds. Open separate accounts for the business. Let the business have its own, controls and all of that. Please do not mix business funds with personal funds. The I there represents internal control. You may want to ask, what is internal control? Internal control are those systems that a business puts in place to detect fraud, prevent loss of goods and all of that. It also encompasses segregation of duties, approval limits, checks and balances, etc. For internal control to be effective, the business needs to define its processes. One person cannot, be a master of all in a business. You need to allow people to do their jobs, and that these jobs their deliverables are checked and accounted for. With internal control, one person do not begin a process and ends it. The segregation of duties must be defined. There needs to be check and balances. Every department needs to be accountable, and then there's a general check for what A is doing. When sales are working, it goes to accounting checks. Just define the different processes you have within your business and establish what works for you. The N there represents no cash movement without documentation. Every sales or purchases should be backed with the appropriate documentation. Invoices, receipts, and all of that should be in place. When the appropriate documents exist, then there's audit trail for all transactions, and by doing so, we are establishing a good financial system. The A there represents accounts for every naira. Please, in running your businesses, do not have miscellaneous. Miscellaneous should be defined. Every expenditure should have a head. It should be identified, and there should be supporting documentation to attest that yes, these expenses was incurred. We're about to enter into 2026 where tax laws are going to become more effective. Account for every naira, please. From suppliers, payments, even to petty cash, everything should be recorded and documented appropriately. And the N there represents never guess your numbers. Please do not make business decisions based on assumptions. Create a system that helps you, create a proper forecast. Do not assume your numbers. Do not say, I think, I assume a certain percentage, etc. Please be very sure of your numbers. The C there refers to consulting with professionals when needed. Entrepreneurs, please, if you are not an accountant or do not have accounting background, please outsource your accounting needs or you hire an in-house accountant. A professional will ensure compliance and accuracy and allow the business owner to focus on other aspects of the business. Please reach out to us and we'll support you with that. The E means evaluate your performance regularly. Always evaluate the system that you've created. If a system does not serve you, if it's the technology that does not meet your needs, please feel free to upgrade or change that particular system. By applying the Smart Finance framework, a business will be able to establish its financial system. Managing a Royale Foodmart alongside my husband, who is an IT professional, has been inspiring and challenging at the same time, especially in a diverse market like Abuja. You need to ensure you have the right structure and processes. I'll say one of the key lessons we've learned on this journey so far is that accountability for us is not just a financial principle, it's our way of life. Everyone involved in El Royale is held accountable for what they do. At El Royale, we do not have drawings. Every item that is being picked by any one of us is being paid for. Accountability goes beyond that. It goes even as far as to our partners, our employees, and everyone. Everyone has a contract that is binding. That contract speculates, your obligations, what you're entitled to, and all of that. No sale is concluded with an handshake. We do not have verbal agreements. We ensure everything is structured. Secondly, we take inventory management very seriously. Our Royale Foodmart is a product-based business. As such, we understand the importance of managing our inventory. Inventory is done at a defined period. In fact, we've established a 3-factor authentication system that helps us to manage our inventories, and that has always worked for us. Finally, we understand the importance of daily reconciliations. On a daily basis, we reconcile our accounts, and that has helped us track our inflows, and everything is running smoothly. So these are the basic lessons that we've been able to learn while running El Royale Foodmart. Let me say this, please. Don't go with vibes. Don't go with vibes. Again, you can achieve this when you tie your marketing plans to financial outcomes. Please, it's not enough to say you want to create awareness. It's not enough for your marketing objectives or goals to be maybe gain 10,000 followers on a particular platform. It should be tied to financial outcomes. For example, by the end of Q4 2025, we should have made 5, 10, 15% profits as a result of so and so campaign. You see, that way we've been able to tie that marketing objective to a financial outcome. Secondly, a business should determine its customer acquisition cost. If your customer acquisition cost is 4,000 naira and the profits you get at the end of transacting with that customer is 5,000 naira, please do not proceed with that marketing idea. So every business should determine what its customer acquisition cost is, and from there you are able to determine if it's worth pursuing. Finally, track the return on investment on every marketing plan that has been invested in. Do not aggregate them. You know why? Because you are able to tell which of your strategies work best. After market segmentation and the initial plan is being executed, please track your return on investment. I think with these 3 points, every business will be able to align their marketing plan to financial outcomes. For a business to scale, they need to have these 3 things in place, and that will determine if they should reinvest and all of that. So a business needs to have capacity, they need to have profitability and timing. Now, capacity in the sense that for every business to scale, they need to be able to meet current demand, because if they're unable to meet current demand and they scale, they won't be able to meet up. Instead of scaling, they should consider improving their operational efficiencies. Meeting current demand creates a logistic loop, and be ready for what comes with scaling. Timing. A business needs to determine the appropriate time to scale, and that timing would lead us back to the business life cycle. Then profitability. A business must be profitable before they think of scaling. Please, why would a business want to scale when it is not profitable, when the investors have not been able to recoup the initial investment? A business that is not profitable has no business scaling. Then with savings, for businesses, savings is not an option. It's like it's like the emergency fund you have in your personal financial planning. Once a business has savings, they are able to identify opportunities, and once those opportunities come knocking at the door, they are able to take advantage of it. But without savings, the business would find it difficult to take advantage of opportunities. Marketing is not a side expense. It shouldn't be seen as an afterthought. When marketing is executed properly, it leads to revenue generation for the business. It creates a cash flow system for the business. It creates awareness for the business. And once your products are known, it creates customer loyalty, which is very difficult to come by. Overall, every business should invest in marketing. I'm excited. Audience should expect a refreshing and relatable journey into the world of finance, all served through the lens of food. With the Food and Finance series, you'd realize that if you can plan a meal, you can master your money. Thanks for having me on the show.